And so let's get to getting familiar with your reports, because I think at the end of the day, what we're hoping that this webinar will do for those attending is find out, is Barbara somebody I would like to have by my side through these daily reports, guiding me and providing me her insights and the breadth of her readings, on these fundamentals that are shifting the momentum and the sentiment in the market. So, in order for you to, as the trader to know that, so this webinar will help you understand who she is, and also let's go to the reports and see, get your feel for what the market, what you told your readers this morning, for example, or this afternoon in the spot report. I think it's better if we just go to the morning report. What do you think, Barbara?
Yeah, sure. I'm just trying to pull it up now. Okay, this is the way the morning report looks. At the top there is a little box, a little Excel spreadsheet that shows the names of the currencies, the current price as of sometime between 5 and 6 in the morning. This is not a trader's report, so it really doesn't matter all that much how precise you are. In other applications, I'm very precise about the time of day that I'm taking the price, because as you know, in foreign exchange, nobody really knows where the open is or where the close is. It can get a little confusing. So this is between 5 and 6 o'clock in the morning where it says spot. Those are those prices. The current position, whether we're saying you should be long or short. How strong is the signal, which I'll come back to in a minute. When did we make that recommendation? What was the date where we opened that position? What was the price at the time, the so-called open rate? And how much have we made or lost on it since then? So if you look at the euro, for example, and again, this is today's report. On this report, the price this morning was 139.11. We were long. It's a weak signal. We went long on the 7th of September when the price was 127.43. So the face gain is 9.17%. By face gain, I mean that's just the simple percentage change from 127 to 139. In practice, we didn't make 9% on having opened that position. That's just the raw percentage change. Now you'll notice something interesting here. I have a new signal. When there's a new signal, I put it in bold and italic, and that is that we went short the euro-yen. Obviously, in a day or two, we're going to be probably going short the euro-dollar. So it's kind of interesting that that it was a cross rate that gave us the new signal first, so to speak. I do a number of pros. I try to give a little summary of what's going on just in the first couple of sentences. Then I do a rundown on what happened in the euro. And if you don't trade the euro, you're kind of out of luck, because you really should know, even if you don't want to trade it, you really should know what's happening in the euro dollar. And the reason you should do that is because it's our benchmark core thing. You see the euro yen, and you see that we have a new signal. Under signal strength, it says new, and it also says weak. What I was starting to say before is that the first couple of sentences are a summary. It's really not enough of a summary. I mean, there are 87 things that could go into that summary.
Right.
But then below that, when I say what's happening this morning, I'm really always talking about the euro. And even if you don't trade the euro, don't want to trade the euro, don't like the euro, you kind of have to know what is happening there. A lot of people think that you should be looking at the dollar index instead of the euro, and I think that's a mistake. I'm not going to get into a big discussion about the dollar index. I do look at the dollar index, and I do like it as an overall barometer, but it's not the only barometer, and it's certainly not the barometer that the professionals are looking at. The professionals are looking at the euro dollar. And let's face it, the professionals are the ones who want to take your money away from you. and they are the key players. They're the major players. They trade 99.9% of all the money that's traded in foreign exchange is done by the big boys, the professionals. And you have to know what they're thinking and what they're feeling and what they're expecting and where they think your stops are in order to deal successfully in this market. The dollar index just doesn't cut it for that purpose. So the first paragraph on what's happening is always about the euro. Then I'll do a little bit of a run through. Now, if you can move down a little further.
Certainly.
You'll see that I have a couple of categories that I always cover. Lately, it's been Japanese intervention, but we haven't had anything to say about Japanese intervention for a month, so I've kind of let that category close itself, and maybe it'll open again or not. I have a thing about the European financial crisis, and again, today I had nothing to say about that. Can you go further down? Go to the next page. You will see that I do a lot of quotes. I quote the Wall Street Journal, the Financial Times, Reuters, Bloomberg, Market News, Business Week, The Economist magazine, all the stuff I read. One of the great virtues of this report, if you have any interest in becoming a subscriber, is that I read for about 6 hours a day, and then I summarize and judge what's good and what's crap from what the press is saying. Some of it is the specialized press like Reuters and Market News. Some of it is the general press like the Financial Times. The Financial Times is very much the soapbox upon which major figures make pronouncements. So when you see that Soros or Greenspan or whoever has got an op-ed article in the Financial Times, you have to read it because they're making a statement to the world. That is the venue where they do that. It's also the venue where the discussion can be quite deep and quite interesting and relevant and important. So I read all of this stuff, and I tell you where I'm finding this material, so if you want to go read it yourself directly in full, you can do that. The other reason I do it is so that you know I'm not making it up, which unfortunately a lot of commentators in the foreign exchange industry do. They make it up. They don't make up data, of course, but they make up opinions or points of view, or they have a bias. And in many instances, what they're really doing is what we call talking their position. And in fact, there's a case here today, a little bit farther down. If you can go farther down, Javier. There's I always cover oil. I always cover the fixed income market, the treasury market. I always cover other assets like the stock market. And if you can go down to oil, I think you've gone past it, but in any case, there was a situation today where some people in the oil industry were saying, oh yeah, well, we know that demand is so high in these other countries that it doesn't matter that the U.S. has a glut of supply of energy. And that's just nonsense. The inventory report that comes out every Wednesday morning is critical for helping to determine the price of oil for the day and for a day or two. And one of the reasons why oil has been going up, yes, is emerging market demand, especially in places like China. But recently, one of the reasons it was going down was because of the situation in the U.S., the economic situation flattening out. And gee, as you see there the price of oil, we had a flattening out, and it failed to hold a high over the August high. See that gold line across the top of the bars? Mm-hmm. It was failing to hold any level over that. It was going over it, but it wasn't holding over it. And so this was somebody who wanted the price to move. It's going sideways, and this guy wanted it to move. So he made up this story about inventory, and the reporter at the Wall Street Journal evidently bought the story, which was, just nonsense. Anyway, I'm able to detect stuff like that because I've been around for a long time. And that's, I hope, one of the contributions that I can make. I know how to judge some of this material just from being old enough to have seen it happen before and to know what's meaningful and what's nonsense. Okay, so I cover all of these other asset classes as well as the currencies because of the increasing correlation among asset classes, which actually has been very confusing and difficult for people to grasp. You quite often will see commentary in the press that says, well, oil is up because the dollar is down. The implication being that there are traders out there who view oil almost like an alternative currency, and that if they're selling dollars, they want to be buying something that's going up, and so they buy oil because it's real. It's what they call a hard asset. Nobody's buying real estate anymore, which of course is also a hard asset, and so oil, gold, and some of the other commodities are considered hard assets. This actually doesn't make an awful lot of sense because hard assets have no inherent rate of return.